Hi there, this is Gloria Heck with South Florida Real Estate Tips. And today we're going to be talking to James Matarazzo, who is our mortgage lender. He's going to be answering all the questions you've been asking about how to purchase your first home.
What advice would you give somebody who is a first-time home buyer that's thinking about buying in this market?
Well, Gloria, I talk to a lot of first-time home buyers, and the first question I ask them, and I think it's a very important question, I call it the million-dollar question. What is the maximum housing payment that individual buyer is going to be comfortable with making without losing sleep at night? And then I just stop and listen. Sometimes they don't even think about that. Maybe they're renting currently and at a certain number, and they'll tell me what that number is, or they're living with family members and they haven't even thought of that. So I ask them that very important question. If they're renting for $2,500 a month, I say, well, is that your maximum, or could you go to $3,000 or $4,000? And the reason I do that is I want to see and get them pre-approved for the maximum amount that they're comfortable with and work our way down if we have to. Some people can get pre-approved for an $8,000 a month payment, and they'll say, James, I can't make an $8,000 a month payment. I'll lose sleep at night. And I'll say, well, then what is the magic number? Just by asking questions, I'll find out what their comfort level is with regard to the mortgage payment. That's the first thing I talk about.
Let's talk about what the 3 C's are when somebody's buying a home.
The 3 C's are cash, collateral, and credit. Cash meaning income. How much income are you making? Collateral is assets in the bank or access to money for the down payment and the closing costs. And credit is obvious. Not only the 3 credit scores, but what is the amount of monthly debt that shows up on a credit report, because there are 2 debt to income ratios I have to look at. All of those things combined will allow me to get somebody pre-approved for the maximum amount that they're comfortable with as far as a mortgage payment, a loan amount, and from there I can back into the maximum purchase price.
What is the debt to income ratio? Can you explain for a first-time home buyer what that means?
Sure. There's actually 2 debt to income ratios that we look at from a lending standpoint. So if somebody makes $120,000 a year salary, and before taxes are taken out, that would be $10,000 a month in this example. 45% of that $10,000 a month can be allocated to a mortgage payment. So principal, interest, taxes, and insurance in this example should not exceed $4,500. That's the top ratio. The bottom ratio is the same new proposed mortgage payment plus their other monthly debts that show up on a credit report divided by that gross monthly income of $10,000. On a conventional loan, that should not exceed 50%. On an FHA loan, we can actually go up to 56%, so an extra 6%. So on an FHA loan, a borrower could technically qualify for a little bit higher of a mortgage payment and a loan amount on an FHA loan as compared to a conventional loan.
Are you aware of any state or local funding programs that will help first-time home buyers to purchase?
Absolutely. Each city and county has their own down payment assistance programs to help first-time home buyers with down payment and closing costs. They vary from county to county and city to city. In the state of Florida, there's also something called Hometown Heroes for a specified type of occupations that these first-time home buyers, they must abide by. So for heroes, meaning police officers, firefighters, first responders, anyone in the medical field, there's a whole list of occupations. But that down payment assistance program in particular will assist with 5% of the mortgage amount to help with the down payment and closing costs. So if it's a $500,000 loan amount, 5%, that's $25,000 that the borrower has access to for down payment assistance. And as I said, each city and county has some variation of a down payment assistance program. Now, a first-time home buyer is somebody who hasn't owned a home in the last 3 years. So maybe somebody owned a home 5 years ago, they've been renting for the last 2 years, and now in their 3rd year of not owning a home, they are technically considered a first-time home buyer. So there's a lot of programs to help them. And I work very well with all the down payment assistance programs throughout the state of Florida and have done many, many different programs in many different cities to help people.
Can you tell us what is the difference between an FHA loan and a conventional loan, and what's better for first-time home buyers?
That's a great question. FHA and conventional loans, they're great. They're two different loan programs, two different sets of guidelines as far as qualifying, different credit score requirements, different debt to income requirements. So it all depends on the borrower. And my goal is to interview the borrowers and go through both programs with them and let them determine which way they would like to go. Some of them, first-time home buyers, they don't have more than the 3% to put down, which is fine. First-time home buyers on a conventional loan can put as little as 3% down if they qualify with the credit score requirement and debt to income requirements. Some first-time home buyers are buying a little bit more than what the debt to income ratios would allow for on a conventional loan, and that's when I would look for the FHA loan. So an FHA loan is a little bit easier to qualify for with regard to debt to income ratio. It allows the borrower to have a higher debt to income ratio than a conventional loan, and it also allows for lower credit scores. So I always start with the conventional first. If a borrower can qualify for a conventional loan, they'll certainly qualify for an FHA loan, but the opposite is not necessarily true.
What's the biggest misconception that the consumer has right now about buying a home?
A lot of consumers think that they have to put at least 20% down to get a mortgage, and that's not true.
First-time home buyers can get in with as little as 3% down. FHA buyers, which means they're not first-time home buyers, they may have bought and sold a home within the last 3 years, they could put down as little as 3.5% down. Veterans don't have to put anything down. They can get in with 0 down. So we help veterans achieve the American dream of home ownership with 0 money down.
Can you give me an example of some person that you helped that had positive results?
Yeah, absolutely. I had somebody who was paying about $2,500 or more in rent, and they finally wanted to purchase something. So they wanted to purchase a small condo. They were able to apply for and get approved for a down payment assistance program where they were given up to $50,000 to help with the down payment and the closing costs.
Wow.
Their parents also gave them an extra $30,000 to help even lower that loan amount further. So their total payment was way less than $2,500, and it was less than some car payments that I've seen on credit reports. So she was able to get into a home at much less the rent than what she was paying, with the down payment assistance program, using funds also from a gift from a family member. So that's the combination. So when I ask somebody, how much money do you have saved in the bank? But I follow that with, how much do you have access to? If I only stop with how much do you have in the bank and they have $3,000 in the bank, but then I say, do you have a family member that can help you with a gift? Yes, my grandmother said she'd give me $40,000 to help me purchase a property. Now I can add that to the equation.
What does the American dream really mean to you?
The American dream of homeownership means to me, and I can go back to when I purchased my home when I was 23 years old, 1 year in the mortgage industry. And I was able to leave my parents' house and own something. I really did not go the rent route. I just left my parents' house and bought my first home with 3.5% down on an FHA loan. And just the pride in home ownership for a 23-year-old first-time home buyer is really why I'm still in this business 37 years later. And I want everybody to feel the pride. And I go also back to the very first loan that I did was also an FHA loan with 3.5% down, where the family was a husband and wife and 2 small children from another country. And they were working here and renting. And they were able to pool gift funds from 20 different neighbors and family members at that time to pool that money together for the down payment and to help them with the closing costs. And going to that closing with tears in their eyes of pride, they never thought they'd be able to own a home in America. That's why I do what I do, and that's what I think of the American dream of home ownership.
Thank you for joining us on the channel today. I hope you received lots of good information from James. He is just amazing, so full of expertise and years of doing this business. So he knows what he's talking about. If you like this video, I hope you will like and subscribe to the channel.